Morgan. Adrian, hi, good afternoon. Good to have you on the show. What's happening in global equity markets right now? We've seen quite a bit of pressure over the last 15 days. Is this a normal bull market correction, or are you sensing something bigger here?
Yeah, I think it's always important at these points to look at some of the bigger statistics. So we had a very powerful move in emerging markets in the third quarter of this year. And then we sort of entered the fourth quarter with a little bit of headwinds. But, as I look at my screen at the moment, MSCI Emerging Market Index is down 10 basis points quarter to date. And the sort of headwinds we're looking at is we've had the oil price moving up on the back of a side negotiation in Algiers, perhaps leading to more of an agreement from OPEC. There's been some chat about whether there'll be some form of tapering, initially in Japan with the BOJ review, and then more recently in Europe, which we think is more market chat. There's absolutely nothing coming out from the central banks. But part of that has been a look at bond yields and also a look at the dollar. So, U.S. 10-year yields at 1.74, which is up quite a bit from their lows this year. But remember, we started the year at 2.25 for U.S. 10-year bond yields. And then the dollar has strengthened. So at the moment, the dollar's, if you look at the DXY index, it's at 97.9. The high for the year is 99. But it's true also the low for the year is nearer 95. So there's a little bit of stress there. The other thing is China in terms of China policy. And we had a one-week holiday in China. And during that holiday period, the government announced a few measures which are city-specific, trying to control very large price moves. And so there's a sort of narrative in Hong Kong about some tightening from the Chinese, which I think is to some extent misplaced. And again, to sort of put this in context, we've seen China selling off a little bit over the last couple of days, but MSCI China, so the broad measure of China index, is up 50 basis points this quarter. So I think it's a little bit of a story of today it looks poor, but remember that we did very well in the third quarter, and on a quarter-to-date basis, things don't look too bad. Now, the final thing, I'd make as a point here is we have the U.S. presidential election on the 8th of November. Clearly, the polls are showing a win for Hillary Clinton, but clients are generally quite nervous, particularly after the Brexit vote, where the polls got things wrong. And so, I've definitely got a group of clients that are sitting on the sidelines saying, look, let's have a look at the emerging market story on the 9th of November when I've either got confirmation or not that the polls are correct.
Okay, that's interesting. Adrian, hi, good afternoon. So what is your own view for the rest of the year? Do you see higher risk aversion towards the end of 2016 and the possibility of more than perhaps a 10% cut in emerging markets like India?
No, I certainly don't. And I think this is a great opportunity to be adding risk in emerging markets. We have an official forecast for the EM index, which is 1050, which is a return of more than 10% by the end of the year. And I think if, let's phrase it in a slightly different way, if the Republican candidate Donald Trump is defeated, then I think you're going to have a major risk-on event. Now, why am I specifically looking at that event? Well, one of the perhaps more consistent messages coming out of the Republican candidate, and clearly it's difficult to follow what exactly the messages are, is a very anti-trade rhetoric, particularly focused against Mexico and China. If the Republican candidate was to win and he was to implement what he suggested when he's been out electioneering, that would be a significant hit to the emerging market supply chain, and it would hit earnings in a big parts of the benchmarks such as Korean and Taiwan IT, and also in Mexico, and also feed through in the Mexican peso. So I think there's a genuine nervousness around that, even though the polls don't suggest that that's a likely event. But that goes back to the errors that were made in the polling around Brexit. So I'm very much of the camp that markets are a little bit weak now. The smart money should be adding rather than taking money away. And if we're right with the dynamics, which is accelerating nominal GDP growth, falling real rates in EM, we've had very good messages coming out from earnings across emerging markets with positive revisions, then I think the dynamics are going to be very favorable.
Okay. Adrian, that actually was my last question. The polls got it wrong for Brexit as well. But to be fair, Brexit actually proved to be the best buying opportunity this year. In case of US election as well, do you think it could be the case of, pre-election rhetoric, but ultimately the president doing what's good for the economy? Do you think in case, that's an outside chance, of course, in case Donald Trump wins and we have a fall because of that, could that also be a buying opportunity?
Look, it hurts me as a Brit to say this, but the UK economy is not that large on a global basis. Its influence on other economies is very, very limited. So you have a local issue, which maybe you could, if you wanted to expand it, say it's more of a European political issue. I think with the case of the anti-free trade rhetoric coming out of the Republican candidate, which is much, much stronger than out of the Democrat candidate, that is a threat to earnings in the S&P 500. It is a threat to earnings in Asia. It's a threat to earnings in Malaysia. Perhaps India is a little bit more defensive, although you have a reasonably big export profile in your equity market. So I would suggest that the U.S. presidential election is a much more important fundamental event than a referendum on leaving the United Kingdom leaving the European Union.
Okay, Adrian, thank you for your quick thoughts, and we look forward to speaking with you again very soon. That's the word coming in from JP Morgan. They believe